Hi, welcome to valuationpodcast.com, a podcast and video series about all things related to business and valuation. My name is Melissa Gragg, and I provide divorce, mediation, and valuation services in St. Louis, Missouri. Today, we will actually discuss environmental, social, and governance policies, or ESG policies, and its effect on valuations with Mark Zyla. Mark Zyla is a valuation expert in Georgia, and he's the managing director of Zyla Valuation Advisors, an Atlanta valuation and litigation consulting firm. He's also the chairman of the Standards Review Board for the International Valuation Standards Council. He was also one of the primary authors of the education program that the AICPA and the Royal Institute of Chartered Surveyors for the credential, which is certified in Entity and Intangible Assets, or the CEIV, which basically certifies valuation professionals in the valuation for financial reporting purposes. Have you even seen corporations start to reevaluate, almost like have a pool of money that they're saying, okay, we're going to need to do something with this. What is it that is going to have the most impact? Like, do you see companies actually start to look and say, okay, well, we've seen that social things have more impact. We're going to do that. Have you seen that kind of thought process go through companies?
Yeah, if you look at corporations in their public disclosures, they're now disclosing their ESG policies. So you can follow it from those disclosures, their thought process and what they view as the most important. And I think in most situations, they see the interrelationship between the E, S, and a G. For example, if you're DuPont and you don't pay attention to the E part, the G part, the government's going to, governance. If you might face increasing regulation, so your governance issues may change. If you don't have the appropriate environmental policies, you may not be able to track employees. Those kind of issues. So it's all interrelated.
Have you seen any delay in a corporate ESG policy? Because, and I'll give the example, like. I had an electric car. I've had electric cars a lot over the past 10, 15 years, right? Currently don't, but in the past did. And in the past, you, as an automaker, you could be like, we're going to do electric or not, right? You could make that decision. And now I think it's shifting that, a lot of makers, car makers, automobile makers that maybe didn't choose to lean into that are now being dragged in some capacity. So do you see a lag in being proactive start to basically lower the value of a company?
Yeah, I think so. I think companies are being more proactive. So I think the policies are being implemented today. Mm-hmm. I think the measurement of the impact of those policies is by rating agencies is a little bit of a catch up. The accounting standard setters are just starting to determine what needs to be disclosed, and then valuation professionals need to know what's going to. Once we get all this data, how do we utilize that to measure its impact on value? So I see that the policies are being implemented. So it's, as valuation specialists, the message, I want to convey to them is, this stuff's coming. So start thinking about it. Even though the information's not perfect at this particular point. But it just an example, the companies are looking at the impact of these policies on pricing. And so they've done marketing studies that show that measure at what level are consumers willing to pay a higher price for a product that is viewed as socially responsible product compared to a peer. And there are certain price points that consumers are willing to pay. And so companies are seeing the benefits of implementing these policies.
So even asking those questions, I think, are important. Is, have you done a recent pricing analysis have you considered changing your prices for something? Because there could have been. It also makes me think that like there's going to be like the threshold of what you should, right? I don't like to use that word, but what we think corporate responsibility is about is going to shift. And you're now, maybe there was like a threshold of do nothing, right? And now you're going to have this expectation. So I almost think at some point you're going to have companies that do not have some sort of ESG policy. And people are going to be like, oh, well, you're only part of that 10% that's not doing it, eventually. And I think that we as valuation people have to say, okay, will investors say, well, if you're part of that 10% that has no policy, how can I actually warrant putting money into this company if I know at some point it's going to affect you? If it hasn't already, because the implication is that it has already, that there are either less people purchasing your products or you're hitting a price competition issue.